Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to take you through the week ahead analysis. We're going to highlight the news this week and some key charts to watch. So going through the news initially, so what we've got high impact wise, we have an RBA rate statement. They are forecast to leave rates at 0.1%, despite them being a little bit positive in their previous meeting talking about a rate hike. So we'll have to see what is said in the rate statement here to give us any idea what the RBA's next step is going to be. We have OPEC meetings this week, which are going to be pretty interesting considering the situation that we've got between Russia and Ukraine at the moment. There could be some kind of talk about that in this meeting. We have seen on the commitment of trader reports actually that there's been a lot of short selling coming into the oil markets. I think what's propping it up though is that geopolitical tension. If that does start to fade, then we could see some big shorts coming into oil. So potentially something to watch there. We do have a Bank of Canada rate statement as well, which they are looking to hike interest rates to 0.5% from 0.25%. So again, very big news this week. We do have Fed Chairman Powell testifying as well, which will be another high impact news event considering the fact that the Federal Reserve have downplayed the 50 basis points jump that everybody's been expecting from them. So again, we'll see if there's anything said about the economy and the interest rates within this testimony, or as Fed Chairman Powell testifies. And then the big news for the week as well, we've got some non-farm payroll numbers. Average hourly earnings is forecast to drop a little bit, as well as the non-farm employment change. Now, other news over the weekend, Russia has been taken off the SWIFT international banking system. This is in an attempt to put a bit of pressure on Vladimir Putin to stop his invasion of Ukraine. These sanctions are quite significant in terms of it's going to affect the Russian economy. It's going to affect people that are affiliated with Russia, who do sort of business with Russia as well. So that could provide some risk-off sentiment in the market this week. And yeah, we're going to have to be careful. There might be a few gaps on the open considering this type of news. Going on to the strength meter then, the strength meter has highlighted some changes. We do have quite a significant change to the pound. The pound has dropped quite significantly this week. Quite like opportunities to short the pound. We've seen Aussie climb to the positive 6, which is now means that we can start looking either for potential reversals in that market or a little bit further strength. I think that we may start to see a slight reversal here if we are to see the risk-off sentiment come back in. Kiwi still performing pretty well as we predicted from this reversal area a while back. Kiwi has been pretty strong since then. And that's about it in terms of significant moves in the currency markets. If we move on to some charts of interest. So the dollar index ended up rejecting those $97 highs last week. Started to see a little bit of a drop in that market. You can see on the 4-hour time frame on the right hand side that price is starting to drop significantly now. If that risk off sentiment is going to come back in, I'd expect another move like this heading into this week, perhaps back down at this previous support level around about $96. If price can get back down into this area and we start seeing those risk off sentiment plays being put into the market, whereas stocks fall and things like that, then the dollar could benefit from that and we could see some upside. The only interesting fact that we had at kind of the end of play last week, there was quite a lot of risk on coming back into the market, and we saw dollar fall. We saw the S&P 500, for instance, completely turn around. So it was a very interesting close in the market. But this news over the weekend should create that risk off, and we should potentially see another move back higher for the US dollar, which is why I'm looking to potentially look at pound US dollar shorts. We didn't quite make it back to the 137 neckline area, which we were looking for that downside to come back in. Instead, price was fairly capped at 136.50s. You can see it on the 4-hour time frame just in here. Market really failing to close above that area, and we ended up with that risk sentiment pushing to the downside. Now that we've broken out of this range, we could start to see some further downside on a pound US dollar, potentially even back towards 133 or even the 132s going into this week. Price has held at 134. If we were to trade below it, that's why I think we'd get some further downside. So pound yen could also be an option. If we're looking at risk off in the market, the yen usually strengthens on this, and that could offer some trading opportunities. And we can see here pound yen formed a large scale head and shoulders pattern, broken through it with the neckline here. What I'm looking at is some supply zones of interest. We've got a couple that I actually like. First one is all the way back up here, around about 156.20. You know, if price can get back into that zone, that'd be a good area to short. Alternatively, the last bullish candlestick for the breakout was actually around the neckline area, around about 155.85. So if you actually got into this area here, started to form bearish price action, that could also be an opportunity to get short on pound yen. Finally then, the S&P. So the S&P reacted really well back down into this support zone through here. Closed as a strong bullish candlestick despite the incredible downside we had for the majority of the past few weeks, and even sort of last week there was a real big bearish sentiment with the risk off, and then we just turned around about that 4,100 area, and the market has now started to break into new highs on the 4-hour. Now, I think an interesting area to be watching from a technical point of view is going to be back down around about 42.56, because price has made that new higher high. We could see price return to the demand zone here and continue higher. However, we need to be aware of the risk off sentiment. If price just starts to flush through that zone, then you know the buyers here are not going to be remaining here at all. We'll probably see a complete reversal. But if we don't see the market taking these new sanctions as risk off sentiment, then and that risk does continue, maybe we will get a bounce on the S&P around about this demand zone through here. So one to watch this week, a few charts to watch this week. Again, it's going to be difficult trading conditions due to the risk off sentiment potentially coming into the market and that headline risk. Just be careful with your open positions, and hope you enjoyed the video. And if you did leave this video a thumbs up, subscribe to the YouTube channel to watch some more Forex trading content, and I'll speak to you in the next video.